Hi, gents. Just thought I'd give you another look at my potato crop. No, just kidding. Just realised that I'd done 10.3, but I haven't actually recorded a video on it. So most of you probably passed this anyway, but it's probably not a bad little revision activity. So I'll quickly run through this. So with the trial balance, you see I've already gone through and circled the expenses and the revenue item. So notice the sales returns also is treated as a revenue item, a negative revenue item. And obviously you go down the debit column for your expenses and the credit column for your revenues, the only exception being sales returns. Also circled drawings because that needs to be transferred to the capital account as well. Not that we've done it in Unit 3, but accrued items are not expenses, prepaid items are not expenses, and accumulated depreciation is not an expense. So the words accrued, prepaid, and accumulated, remember they don't go into an income statement, so you would ignore those. But that's more a bit of advice heading towards Unit 4. Right, so we go ahead and we close off the revenue accounts by debiting them, just the two of them, discount and sales. Credit the sales returns account. Those three accounts now equal 0. Add them up, or the net result, and put that into your profit and loss summary. Close off the expense accounts as identified in the debit column. By crediting those accounts, they now equal 0. Add them all up and pop them into the profit and loss summary account. So the profit and loss summary will get 3 entries into it. Total revenues, total expenses. You then subtract the credits from the debits, and that will give you a profit or a loss. So if your credits are higher than your debits, you get a profit. If your debits are higher than your credits, you will get a loss. You then transfer that net result down to capital. So we now have 3 entries into the profit and loss summary. 1 for revenues, 1 for expenses, and 1 to transfer it to the capital account. So if we make a profit, that is credits higher than debits, the capital account gets a credit. Right? So we've got money in the bank. Money in the bank, you know what I mean. We've made a profit, so it goes to owner's equity. And the fourth journal entry is to simply transfer the drawings as given to you in the question. It says that it consists of $1,600 cash and $400 inventory. We don't care. We're transferring the total amount across. Right? So the total drawings. Drawings obviously gets a credit because it's currently a debit balance. So a credit will make that account now back to 0. So the double purpose in closing and transferring, so closing the revenue expense accounts enables me to calculate the profit, 3,800, resets all these accounts back to 0 in preparation for the next reporting period, and also resets the drawings account back to 0 in preparation for the next reporting period. Right, in terms of ledgers, which is the ones that confuse students more than journals, your profit and loss summary has the total revenues on the right-hand side, credit side, total expenses on the left, debit side. Grab the higher side, copy it across, and the balancing figure, which makes this add up, right, goes to the capital account. Right, capital account. And that's transferred down to the profit and loss summary down here. Right, so those two entries go together. This account now is finished with, profit and loss summary now equals 0 in preparation for the next reporting period. Drawings, so we had a bank figure and an inventory figure. The total amount goes to capital. Right, so that $2,000 appears in here. We don't write all the individual drawings in the capital account. One figure and one figure only. If there are any capital contributions, they would be listed separately on the credit side, e.g. 2 or 3 banks, vehicle, computer, whatever the owner contributes has to be shown separately on the credit side. But whenever the owner takes something out, because we've got it all summarised into one account, drawings is only ever one figure. Right, and that's what you'll be doing on the SAC, practice SAC, informal SAC, whatever you want to call it. You'll be doing the closing entries like that. You'll be producing those ledgers and producing probably an income statement. This question here asks you to do the equities, so it's good practice to know that equities, the word equities means the claims on the assets. So you have claims on the assets by external equities, that is liabilities. So they have the first claim on the assets. What is left over is the owner's claim on the assets. Right? So the 47,700. So equities represents the total claim on the business assets split between external liabilities and internal, the owner. Right? So that's your equities section. So always remember to split the loan. What's due in 12 months goes there. Balance is non-current. The profit is added. There was some problem in the solutions. I think they had a different figure there, but you just take my figure. And less the drawings. Right? So that is 10.3 as a little revision activity. So just check it and plough on with the rest of Chapter 10. So it'll be just working on that during the double. And as I said, I'll pop up a practice sack as well.